Macy's hit with the downgrade on Wall Street after announcing turnaround plans in its Q4 earnings report. The retailer under pressure amid high inflation. TD Cowen cutting the stock to market perform from outperform and slashing its price target by $3. The analyst writing that while Macy's may be making the right strategic investments towards long-term profitability, there are some risks in the near term. Joining us now with the call is the analyst, Oliver Chen, TD Cowen Senior Research Analyst. Great to have you here. You're also a retail professor. We got to know. Let's give you all the hats and titles. Research professor over at Columbia Business School. Thanks so much for taking the time here today, Oliver. First and foremost, let's dive into this call here. What really led you to alter, and what did you hear from the Macy's team here in this most recent quarter that really stuck out to you?
Brad, I'm excited about the plans. However, it's a transition year. A lot of this will take time. It's a bold new plan, which involves store closures, product, as well as digital changes. They are good changes. Less is more in retail. The stores definitely need more service, and inventory can be more specialized. So, looking forward to it, but it's a transition year that will take time. So I think that earnings estimates are likely to be within guidance and have lack of upside and also have risk. The other part of this, Brad, the stock has run 50% in the past 4 months. So, in thinking about valuation, expectations are fairly high as well. So, those two things, thinking about the stock, thinking about a good strategy, which will take time, and this being a transition year, moved us to the sidelines.
Oliver, you mentioned the fact that the transition is going to take time. I think a lot of people are asking how much time. Do you have any idea what that timeline could potentially look like?
Yeah, Shauna, the estimates that we're forecasting this year still call for negative growth. So it's really the year after in terms of more sustainable positive growth. And keep in mind, we have a strong consumer now. We have not been able to grow revenues at Macy's since 2022 or before. And this has been a problem. Consistent growth has been a problem. As we think about what's happening at Macy's, they really need to get the younger customer. Also, about half of their profitability is related to credit card income, and there's legislation that's happening there as well. Those are key risk factors. Product needs to improve, and they're working on the private label, and it is getting better. But the younger customer will be critical for the long term, in our view. And store traffic has been flattish to volatile. It's not easy to come by.
How does the platform on which they're selling need to improve as well for that younger consumer that's out there, Oliver? Because I think about my own, and I'm not the youngest consumer out there, I will acknowledge that, but I've been noticing this shift in purchasing habits for a lot of younger consumers and finding inspiration on what they're seeing within their feed and being more prone to hit the buy button there than load up the gas, put it in the car, go over to the experience at Macy's, or even decide to go to a specific website alone just to purchase and type that in when it's just in their feed and they can go from there. So how do they need to change that?
Yeah, Brad, I think you're bringing up great points with the social media changes. In particular, what we're seeing is the TikTokification of retail. We also believe in short form video. So, what Macy's needs to do is better integrate all these different ways to get to their product, make it easier for the shopper, and continue to be omni, meaning connecting online, offline, and mobile. As we look forward, a live streaming, editorial, curation, Macy's is a place that stands for fashion and inspiration and has that kind of magic. It is not trying to be a destination where prices are the main event. So it's an evolutionary process in terms of experiential retail and also being curated. The small format stores are quite positive in that they're much more curated with better service. And service is a key theme too. When all customers walk into stores, they want service in terms of footwear, ready to wear, and they want to be able to check out in an easy fashion. That has not been consistent across all Macy's as well. So, physical, digital, social media, the TikTok shop, these are all things we're following.
Oliver, they also have the potential proxy fight here with Arkhouse. Arkhouse had unsolicited a bid for $21 a share. Macy's today just around 17, just over 17 bucks a share. What do you see this potential proxy fight doing to valuation? And do you see Macy's potentially getting up to that premium offer?
Yeah, Shauna, a great point with the proxy fight. What we'll see is continued volatility in the stock. It really depends on the management team they're putting up in terms of potential changes. That being said, on this bold new plan, Macy's announced monetization of 600 to 700 plus million of real estate over time. So the company is well on its way organically to extracting value out of properties, and this is quite a manual long-term process. So we'll see a fair bit of volatility. Bottom line, though, is that this bid is out in the marketplace, so expectations on this are fairly high and monetization expectations as well. And that's part of our reason for moving to the sidelines. Underscoring Macy's is a lot of cash flow, $1 billion of operating cash flow. And that's part of what makes this attractive as an asset. It's well capitalized and is profitable and generates cash flow as well.
Oliver, you've got our internal Slack channel blowing up right now. I just got to ask you about one more thing. The little luxuries, Blue Mercury, one of the standouts in this interim period of time. Where and how much would you be satisfied with Macy's continuing to make sure that they invest in that part of the business for that next leg of growth?
Yeah, Brad, we're structurally really excited about beauty and wellness and taking care of yourself as well as cosmetics. Blue Mercury is a great concept in that it's a store format that customers love in terms of self-service and having multiple brands and being off mall. So the Blue Mercury growth, as well as Bloomingdale's, which is an iconic luxury banner which has wide appeal and unique product, those were great ideas for the company to continue to grow. However, they're about 10% or less of overall Macy's. So they're not needle movers, but I'm really encouraged. They should be putting capital towards those concepts. The beauty market is vibrant and growing, and everybody loves it. And Bloomingdale's is an iconic luxury franchise, which has a lot of brand equity and a lot of growth potential.